India cut corporate tax rates to bring it at par with global peers. What's more, the government removed increased surcharge applicable on capital gains made by FPIs. Is this enough to turn foreign investor sentiment back in favor of Indian markets? Let's ask veteran emerging markets investor Mark Mobius. He's joining in right now. Mark, thanks very much for taking out the time. Indian indices clocked the best one-day gains in over a decade on the back of the surprise corporate tax cuts announced by the finance minister. This is one of the biggest booster shots the industry has received so far. As a foreign investor, how do you read into these developments?
I read into it very positively because it's a great move, and it shows that the Modi government can take really aggressive, striking moves to improve the situation in India, and it's very good news.
Do you see corporate profitability improving significantly on the back of these tax savings? And would you then compare this to the time that corporate taxes in the US were cut from 35 to about 21%?
Well, you know, the impact in the US was very positive, and the same thing will happen in India, in my view. It will be very positive and will really give a big dose of optimism to the business community in India generally and to foreign investors. So I think it's a tremendous move on the part of the government. Now what's needed is for them to follow up to clear away some of the bureaucratic hurdles that people have to invest, particularly for the small and medium-sized companies. If they can do that, that combination would be quite tremendous.
Does this call for an India re-rating according to you? The push is now strong and hard to make sure we are aligned with the other countries with similar tax structures?
I think it should call for a re-rating of India. I think, you know, a lot of people are concerned about, the budget may be too taxed and you'd have a big problem with the budget, for example, the deficit to GDP or whatever. But India is not in trouble in that regard. India's got a pretty strong financial situation as regards the government is concerned. And I believe also that government should be issuing large tranches of government debt to the international market. That is, I think, will help India a lot to improve infrastructure over the long term.
Do you see, because of this, a lot more foreign money finding its way back to Indian shores?
Definitely, because now it becomes a much more profitable enterprise if you go into India with these taxes being much less. You must remember that when foreign investors look at India, they compare India to Indonesia, Malaysia, and other countries around the world, but particularly in Asia. And now India is competitive as regards to taxation vis-a-vis these other countries.
Do you also see more money now being put to use to fuel capex in the private sector, and the additional levy that comes that companies now have, leeway that the companies now have, can be used to bring down prices to spur industry level volume growth?
Yes, that's one thing, but you must remember it's not only a matter of cutting prices but also increasing productivity. So now companies can invest more in more productive equipment and increase efficiencies in their manufacturing, which again will feed into prices, enabling them to reduce prices. So it's a sort of a double whammy, so to speak, as regards to prices.
You know, the finance minister also is giving a push to manufacturing. Do you think India can become and make its mark in the global manufacturing supply chain, Mark?
Definitely, there's tremendous opportunities for India. But India has to follow what the Chinese did, what the Koreans did, and all the other countries where they set up special export processing zones so that exporters could import raw materials for their processing and then export out into the greater world. That's what needs, more of that has to be done, enabling companies to come in and become very big manufacturers, because you must remember, India has got lots of labor, lots of skilled labor capable of doing excellent export work.
You know, we've spoken about all the positives. Does the impact of this in the fiscal, the stimulus on the fiscal math worry you? You know, you had earlier on in the past said that even if the government prints a fiscal deficit of 5%, it will not bother you a lot.
Yeah, that's what I feel. I don't think it's a worry. Because we must remember, now with this tax cut, you're going to see greater productivity, more production, more economic activity, which in turn will bring in more tax dollars. So, the so-called Laffer curve comes into play here. I think it's going to be quite positive. And by the way, I think the central bank should be lowering rates in line with what other countries are doing. I don't think a lower rate will be detrimental to the Indian economy. It's very important to have not only lower taxes, but lower interest rates.
And in light of that, are you expecting the RBI to lockstep with other central banks in terms of the cuts to, when it meets this October?
I hope so. I hope they get that message. And if they compare themselves to other countries around the world, particularly in the region, you'll note that Indian rates are high, and that shouldn't be the case. There's no reason why India can't do better in terms of lower interest rates, because it's a competitive world, and you're seeing that on a global scale, lower and lower interest rates.
Mark, will you be looking to increase your holding in Indian equities now? Is there comfort on the valuations now and a clear outlook on the earnings growth as well?
That's right. What I'm interested in is seeing companies do two things. One, increase their dividend payout, and number two, invest more in the business, invest more in labor-saving equipment, more efficiency, and greater application of new techniques to their manufacturing and their distribution.
And which sectors do you think you're going to be focusing on now?
We'll be focusing on manufacturing to begin with, because we believe that with the infrastructure spending that's going to be increasing in India, those companies that feed into the infrastructure spending will be very, very good. Consumer, as you know, we're always interested in the consumer. Per capita incomes are going up, so that's another area. And believe it or not, in the financial area, with this interest rate cut, hopefully a lot of the loan situations, bad loans, will be able to be paid back and solidified, and that will help the banking system as well.
Within the emerging market basket, where does India stand now post these announcements?
India stands pretty high. Up to now in our fund, China is a little higher than India, but now we may see India surpassing China. It depends on what opportunity we find in the Indian market.
Is China opening up its markets a deterrent to big money coming into India, according to you?
Not really. You must remember, China has not completely opened up the market. There's still a lot of restrictions on what can be done. And of course, the large cap stocks will benefit the most, because the large institutional investors will be the one that would be most allowed to enter the Chinese market. So it's a mixed bag. We're interested in the medium and smaller companies, and that's where there's going to be opportunities in India.
All right, one last question, Mark, before we let you go. Any major risks that you see in the medium term which could, probably put a spanner in the works to the India growth story?
Yes. I mean, if the Modi government does not follow through on cutting bureaucracy and cutting the difficulties businesses, and particularly small and medium-sized businesses, have in doing business, then there could be a negative for the Indian economy.